They have to look at the long-term story. You got to focus on that. Yeah. So since I said I wasn't going to be selling it tomorrow or next week or next year, I was going to sell it in 3 to 5 years. And whatever the market's doing doesn't make a difference to me really, because I wasn't going to sell it anyway. So I can just, stay steady. If you believe, if you have conviction, you've done your research, let that, help you to hold on and switch out the market noise. That's what I'd say. I think you can't go in blind. If you go in blind, that's the problem. Because when you go in blind, that's when you don't know what to do. And that's when all of this volatility will affect you. But if you know, and you've done your research and you know it's really good, then you will be strong.
Hi everyone, we are in for a very special treat today. We have popular investor Lena Birse joining us in the podcast to share her insights, her techniques, her strategies in the markets. Hey Lena, how are you?
I'm fine, thank you.
How are you right now as an investor? What's your frame of mind coming into all of this?
Well, I'm used to it because I've been investing in the market for a long time now, about 8 years. So I've seen many ups and downs. So yeah. And, my strategy is very long term. So I know in the near term, the market can be very, very, very volatile. But I know that, if you allow time, it'll all be okay.
I'm so curious about your background. Did you start as a financial advisor, or a professional, or were you doing something else before investing fully?
About 8 years ago, my husband, he sold his company, so we had some money. So we had previously used professionals, but we didn't feel like they had done an amazing job. So we thought we'd just do it ourselves. So that's how we started. So we decided to invest that capital into the stock market that we'd made.
That when you got the money, did you jump in right away that, okay, this amount, I'll just invest everything? Or did you tranche it first that, okay, I'll start with this percentage of this particular amount before I start investing into it?
Okay. No, we put everything in. And I think the reason we felt confident is because, you see, we already had a company from start to finish. And also we had been investors in property market. So, we had experience in sort of, taking risk, if that makes sense. But initially we started off buying big companies in the UK, sort of big solid companies that gave a good dividend. That was the initial plan. Yeah. But then about 8 months in, I started to hear about, growth technology stocks. And, that kind of suited us better as investors because the rewards were way higher and we wanted, higher reward. So we decided to switch out of that. So again, we sold everything and went into the US market. But, we were fine with that because we understood that it's going to be very volatile. But because we were having a very, very, long-term, holding point, because we said, we're going to hold this money for 20 years. So we knew we weren't going to be worried about the volatility. We knew it would be, but we were fine with that because we weren't going to be needing the money in the short term. And I think that's really important when you're investing in, especially growth stocks. You need to really, be prepared to hold for a while.
When you buy and then you position also for the long term, there will be times that what you positioned on would go up. And then there would be times also that from your initial positions, it would start to go down. What's your mechanism of buying higher and then buying also lower later on? Or does something at the back of your head tell you, oh, I bought this at a much cheaper price before. Why am I buying it higher? How do you go about that?
To be honest, I don't really focus on price. I focus on performance. So if I see the company's doing really well, then that encourages me to invest some more in that company. So that's how I look at it: is how is the company performing? Okay. And also if I see a new company that I think is really exciting, it's got really great potential, then I will just buy it, because I'm going to hold it for a long term. However, if market is very volatile, or if some analyst gives it a downgrade and I think that wasn't justified and this is actually an opportunity for me, then I can add cash to my account and I'll pick up some more shares.
With the current stocks in your portfolio, Nvidia's good, Apple is good, PayPal is good, Shopify is good, and then fresh funds come in. How do you decide where to allocate them? Or do you allocate to all of those?
Generally all across. I try to do that, yes, to keep it balanced. But if there's some specific stocks that I really feel I haven't got enough, I will allocate more to them. So it's kind of always working within the balancing of the portfolio.
For example, Nvidia drops massively its percentage in the portfolio would be lower. Next time you have cash, you'd allocate more for that as well.
Yeah, at this point, of course, if they start to get too profitable and they're starting to dominate, the performance of the account, then I'll have to reduce them for sure. Yes, and put the money against the other great stocks I have in my portfolio that I think are going to do extremely well too.
Is there an instance that something would change also in the storyline or the narrative of the stock that you are watching, and then you decide also it would be time to let go of it, or regardless of what happens, you're still gonna stick to that particular stock?
Yeah, I do. If I see there's a better opportunity somewhere else, then I will take it out and put it somewhere else. Like, for example, I had Tesla a few years ago. Then it did nothing for many years. It just kind of flatlined. So then I moved the money to other stocks that were moving. And then early last year, I saw the story was changing fast. So I just quickly, took out money from other stocks, which I still liked, but I moved it back to Tesla, and that did really, really well for my portfolio.
Tesla is one of the ones that have been beaten down also the past days, the past weeks. What's your sense on the strategy on how you would deploy for Tesla?
I follow the earnings, and the recent earnings were really fantastic. So, they are really doing well, businesses, all of them. I mean, all of them in my portfolio doing great. So, so I'm not worried. I'm just holding on.
Among the stocks that we have, there's thousands of stocks out there. What's your style on how you would filter it out, the strategy on narrowing it down? And I'm sure a lot of people also would be interested in that, because looking at the US markets, there's so many stocks out there, and just try to monitor everything. It's relatively hard for a lot of people.
Because you put the money in, and when you put the money in, I start to watch the stocks. And because I'm watching the stocks, I'm following the market. And because I'm following the market and I'm reading every single day, I am finding stocks every single day, you see. And I know the kind of stocks I like. I like stocks that have the potential to grow, because it's a growth portfolio. So that's really what I look for, growth potential. I look for great product. And, and also I like to see great management, and that I will know by following the earnings call. So if I see a stock and I think, wow, this sounds really interesting, it'll go on a watch list. I'll watch it for a while, check out the earnings, and then I'll take a starter position. And then as my confidence grows, I will start to build it out over the years.
Wow.
That's why, like Shopify started tiny, and then I just kept adding, because every time the story was just so good there, just so many great things I kept hearing. I just kept adding more and more to it until it became it's actually now, I think the ones that has been the most profitable on my portfolio.
When you came in and when you started to analyze Shopify also, was it at the point where there was still uncertainty also, and it wasn't really noticed as much as well? For a lot of people who get distracted by so many noises out there, what's the best way to filter things out also, that bad news here, bad news there, but it doesn't really affect the earnings? What should they do?
They have to look at the long-term story. You got to focus on that. So since I said I wasn't going to be selling it tomorrow or next week or next year, I was going to sell it in 3 to 5 years. And whatever the market's doing doesn't make a difference to me really, because I wasn't going to sell it anyway. So I can just, stay steady.
What was your frame of mind March 2020 when everything dropped, when markets around the world were dropping?
I just said, oh my goodness, here we go again. When we first went into the US tech stocks, I tell you, 3 weeks later, there was a tech sell-off, and we just got them with fresh money, and it went down 30%. So, I think that was the hardest point, to have gone through that when you put in fresh money and your account goes down 30%. I think once you survive that and know you can hold through anything, then, it was fine. Market does this kind of stuff. It goes up and down, and then it goes up.
There's a lot of people also right now that are in losses, maybe because they bought at the top, regardless of what asset class they came into. Maybe they bought Tesla at a high price, or some of them bought cryptos also at a high price. What's your advice for them, for people right now who are maybe don't have your acumen or don't have also your experience, that are feeling nervous right now?
When I went into the stock market first time, it wasn't at an all-time high and it went down 30%. If you believe, if you have conviction, you've done your research, let that, help you to hold on and switch out the market noise. That's what I'd say. I think you can't go in blind. If you go in blind, that's the problem. Because when you go in blind, that's when you don't know what to do. And that's when all of this volatility will affect you. But if you know, and you've done your research and you know it's really good, then you will be strong.
I know there are different types of people that are investing, but for people who would somehow emulate your style of investing, what can be the proper way for them?
I would say wait till we hit a next new all-time high,
Mm.
because when market pulls back, it always has historically gone on, not only recover, but gone on to new highs. So if you can be patient, wait. I think, if you're an investor, you always have to be patient. That's going to be, your advantage. So if you can be patient and hold on, then that's what I would do.
I'm curious about this. Looking at your portfolio again, what do you like the most about Apple and PayPal?
Normally, a lot of these companies, I've picked them because I actually use them. So I know them well because I use them as a customer. Initially when I first went in the market, I was buying these UK companies. It really wasn't working for me because I didn't know these companies. Even though I'm here in the UK, I thought buy in the UK, but I didn't really understand supermarkets and, construction and that kind of stuff. But when we went to tech, I was like, God, this is going to be so easy for me because I use these companies. So it's going to be so easy for me to understand how they work and to follow them because, I'm familiar with them.
How big does valuations play in your decision also to still buy a good company?
With my portfolio, I've designed it into sort of 3 sort of market caps. So I have big holdings, and then I'll have middle ones, and then I'll have small ones. And the small ones, they have a lot of potential of growth, but there's more risk. So there I'll keep those position sizes very small. So you will not see, a small, starting company the same size position as Apple or Amazon, for example. That's how I do it, If they don't work out, the small ones, the big ones will keep me going anyway.
Conviction-wise, will you be more aggressive the next months, or will you taper off a bit in terms of how you would allocate as well?
I think it's good to pace ourselves because, right now it's just so volatile. It's like all the time volatile. Like last year, it was just like one big dip and then one big swing back up. But right now, this could go on for a while. So I would say pace yourself, look out for those, companies you like, set up a wish list. And then, if they really go low, get some more. But I would say pace yourself because, I don't know how long this could go on. I think in 2018, it went on for like 3 months. So I know they can't, if you look at my stats, you'll see I had quite a rough last 3 months. So I would just say pace yourself. It can go on for a while. Then I wouldn't be thinking about at all like price. I wouldn't be thinking I'm being opportunistic. You know what I mean? I would just be thinking like, oh, I like this company and I would like to have it in my portfolio. So then I will just sort of just buy it whenever I want to buy it.
What led you into that? Okay, as long as it's good, the price doesn't really play a very, very big role in my decision.
Because, we had our own company too, and we started small and, there were times things looked really bad for us too. But, we turned it around again and again, you know what I mean? So I know that, you just need to, if they are good people running these companies, you just have to give them time, they'll pull it through, You've got the reports to follow to see how they're progressing. So if the market is punishing them, because the market's having a sell-off, that doesn't mean the company is not good. No, it only just means for you as an investor, it's an opportunity.
In terms of diversification, I see that you have around 40 plus stocks. How does that go? Do you also have like a limit that I won't go lower than this number of stocks, or do you also have a maximum that not this much already, having this much won't really give me as much gains as I also would want as well?
I think it's more important that I have a good mix for me. So I have enough big ones, enough middle ones, and enough tiny ones, because the tiny ones can really give you that extra big boost. So I think that's more how I look at it. So because sometimes the big ones have really grown so big, like Shopify and Nvidia, they've really made such big profits from my portfolio. I probably won't be thinking to put another big one in there. But then I would if I felt like I was having too many small ones.
Do you have like a range per market cap, something like that?
Yeah, market cap.
What's the biggest mistake that you've encountered while you were trading and investing, and what was the biggest learning that you got from it? Because I always tell people that when you invest, don't just look at people's successes, look at where they were before they got that success. And if there's one thing that you would want to impart to people based on your mistakes, what would it be?
Really say I haven't made any big mistake because I've always had a lot of stocks. So when you have a lot of stocks, you can't really make a mistake that's going to really affect you properly. Do you know what I mean? Just do your research. That's the most important thing. You've got to know what you have, because you don't want to end up selling a really good stock because you got freaked out because everyone was so negative about it. and then you turn to regret that. But the great thing about the stock market, unlike property, is that if you change your mind, it's really easy just to go and buy it again. You know what I mean? Because it's such a liquid market. With property, if you bought something, you've got, tax and all of these fees big fees to think about. You can't move around. If you said, oh, actually, I changed my mind, I don't like this location. It's not easy just to go and sell it tomorrow. But with the stocks, you can. If you think, actually, I bought this, but actually, you know what? I've totally lost confidence in this. You can come out and just buy something that you feel more happy about.
Wow, that's amazing words. And it goes back to looking at our entire conversation. It goes back to your number one background as a business person. Number two, you looking at it from a lens of, okay, I'm a business operator. I know what to look at when I would want to come into a business. And that's so nice because everyone right now just looks at the price. They look at how big it would go. And it's nice to hear insights like this to bring back for people to be brought back to the real condition of what the stock market is, that you're really buying businesses.
Yeah, exactly. I feel very much I'm an owner. I don't feel like, I just want to get a good price and then sell it for a good price and come out and take my money. I really feel a true investor. I'm really part of this company. I'm part of this journey.
One girl is one of the best in eToro. So if you want someone who's really, really good, and based on what we're talking about, she knows her stuff, copy her, follow her. But I'm just curious, what can they expect from you?
They'll expect consistency for sure. My strategy is always the same. It's always been the same since I've been on eToro, working as a PI. So yeah, what's the most important thing I would say when you come to copy me is, first of all, really, you need to have the same time frame as me to be successful. So you need to be someone who is prepared to put your money away for the next 3 to 5 years, because then you allow time for your portfolio to do well. If you come in and you want to come out in 3 months, 6 months, you're taking too much risk. So definitely you need to have a long time frame. And yeah, I would love to have you as a copier. Here's
what I like about our entire conversation is that the insights are amazing in a way that it goes back to the business, and it's not just all fluff. It's not just, oh, this one will go to this price by the end of the year. For people investing in the stock market, does it always have to be a 5-year horizon? Or how about people who are in their 30s right now and then they don't plan to touch it until they're 60 or 70? What should be the strategy for that if you have like 30, 40 years in front of you still?
Even better. Yeah, you'll do really well, I think, if you hold. The longer you can hold, I think it is the better. But I think you just got to say to everyone, at least 3 to 5 years, because some people, might want to pay off whatever, so allow that. But for me personally, I will always be in the stock market. My whole life, I will always be there. I love it so much.
Any final words to people who are thinking about investing, but they're also scared about it? They've heard about the stock market, but it feels like it's risky, it's volatile, or they feel that they might lose their shirt, or it's something that they think it's only for smart people. For those watching this, one girl has done very, very well. Congratulations to you. We got over 101% last year, and then 46.89% also the year before that. So
I would say, again, it's time in the market, not timing the market. I think when market is low, like now, I think it's a great time to come in. As long as you prepare that it can go lower, and you're going to be okay with that because, you're in for the longer term. So yeah, the stock market is one of the best places I can think of for, growing your wealth. So, sometimes, there's a really famous saying by Mark Zuckerberg. He says, the risk is not taking the risk. So I think when you think about that, you think about it differently. Do you know what I mean? If you hadn't taken that risk, maybe you don't have all of these great things you could have had.
In my opinion, if it's left there, given that there's so much printing going on, the value of cash not really put to good use won't really massively help you over the long term. And yeah,
exactly. Yeah, that's true.
And I encourage a lot of people, for those watching this, that if you're in your 30s and your 40s, don't waste the prime years of your life also just spending everything. I really believe that money invested still better than money spent. I do hope you start investing also, and you at least shift the mentality that it's also good to set aside money for the long term. Thank you so much, Lena. It's such an honor to have one of the best popular investors in eToro, sharing your insights to all of us. So guys, to everyone who wants to copy her, I'll put a link down in the description so you guys get to see her profile as well. So thank you, everyone. And Lena, thank you so much. And I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.